Hey guys, welcome to part 2 of this video. Is it better to buy investment property with cash or using a mortgage? Now, if you missed part 1 of this video, I'm going to drop the link in the description below. Now, moving on to part 2. Now, part 1, we talked about investing in investment properties with cash. And I talked about the pros and cons of that. Now, this section, I'm going to talk about investing in investment properties with a mortgage and what the pros and cons are for those, so you can make the best decision that you can make for your business. So let's get started with part 2. So when you are investing in an investment property with a mortgage, there are some great rewards with that. So the pros of investing in properties using a mortgage is you get a higher return on your investment. Let's say that you purchased a property for $200,000. You put $50,000 down. And so you're making the payments, and after maybe 10 years you decide to sell the property. And that by that time you've already paid down some of the interest and the principals on your mortgage. And let's say that by then your balance is at $100,000. And you sell your property for $200,000. Well, you just gained an extra $100,000 on that sale of that property. The second pro of using a mortgage is you get more leverage. Now, how do you get more leverage? One, you are leveraging other people's money, whether it's through hard money lenders, whether it's using a bank. You're not using your cash up front. So that means you get to keep more cash in your pockets, and you don't have to pull money out of your reserves. You're not constantly draining your reserves by investing your own money because you're leveraging other people's money. Yes, I know you all probably heard about this a lot, where they talk about leverage other people's money when investing in real estate. Remember that, because it's going to come in handy, and it's very beneficial to you if you know how to do it the right way. And when you are leveraging other people's money, that gives you an opportunity to buy more properties. So you can continue to get more and more properties and still keep money in your pockets. So the third pro of using a mortgage kind of ties in with number 1. Your profit grows as your mortgage balance decreases. Now, another pro of using a mortgage is you can pay off the mortgage quickly if your property is not making any revenues, meaning you are bringing in a loss every month. Let's say that your expenses are more than what your rent is, your rental income is. Then you can pay off that mortgage as quickly as possible, so that way you can increase your profits and generate more revenues. And the fifth pro of utilizing a mortgage is you get so many tax write-offs. One, you get a tax write-off for the mortgage interest that you're paying on that mortgage. You get tax write-off for the property taxes that you're paying, and you get tax write-off for any mortgage fees or any other fees that you have to pay in order to acquire this property. So what are the cons of using a mortgage? Well, the first one is it could be stressful. The process of obtaining a mortgage could be very stressful and complex because there are a lot of qualifications that you have to meet, such as income. Sometimes the banks want to see so many years of financial statements, possibly 2 to up to 3 years of financial statements. And if you don't have good numbers that they're satisfied with, that can make you get declined for a mortgage. So it's very stressful, and it's a long process because you have to go through all of this paperwork, go through all these different underwritings, and so many steps in order to get approved. Sometimes these steps can go so long to where you won't be able to close on the property in time because you haven't gotten approved in time. Another con with using a mortgage is there's more risk. I know you all probably heard the saying, more risk equals more returns, or greater risk equals greater returns. That's true if you know how to utilize that risk the right way. So when you have more risk, the risk that comes down to having a mortgage is, let's say that you are renting properties and eventually you have vacancies. So while you have vacancies, you don't have tenants that you can rely on to pay your mortgage. So you're going to have to come out of pocket and pay the mortgage on that property until you can fill your properties with new tenants. And sometimes it could be a long, tedious process to find qualifying tenants, because not every tenant is going to be able to afford to cover your rent. So that's going to leave you with paying the mortgage, and that can eat up all of your excess revenue or your reserves that you have saved to invest in future properties. And the last con is you have less monthly profits. Why do you have less monthly profits? Well, because you have a mortgage that you have to pay for. And on top of that, you have other expenses. So let's say that you're renting a property for $1,500 a month. So let's say your mortgage is $500 and your maintenance expenses are $500 as well. So that's $1,000. So that means your net profit is only going to be $500. So just to summarize everything up, now there's no right or wrong answer to say whether or not it is good to invest in an investment property with cash or a mortgage. As I mentioned before, it's all dependent upon your preference levels, what your risk tolerance are, what are your business goals, what are you trying to achieve, what are your financial goals. So that answer is, again, it depends on your situation. It depends on you, what you believe, what you feel, what you want to achieve. So if you found value in this and you want to know how you can make the best decisions for your business and determine which strategy would be beneficial for you to use, whether you're investing with cash or a mortgage, then click the link below to book a call with me, and I will be more than happy to guide you and point you in the right direction. So that way you are making the best decisions that you can make for your business. Until then, I will see you guys on the next video.